Hey everyone, hope everyone's doing well and had a good day. In this video, I will review the Emini 5-minute chart from Thursday, June 5th, 2025. And the first thing I want to talk about is that we have a small gap on the open, and small gaps usually close within the first hour of the day. And if you just go back and collect maybe 50 small gaps and look at the behavior on the open, you'll see that most of the time the market goes back and at least tests the gap, if not actually closes bars beyond the gap within the first hour. And so we had a small gap up going into today, and I included some bars from yesterday because the size of the bars I thought was also important. Bars 1 and 2 are relatively big bars. Look at the past 6 bars from the close of the prior day. Those bars are relatively small compared to 1 and 2. So we had a breakout up, gap up, and then a strong reversal and follow through down, closing beyond all the bars to the left. And it's a big enough event or bear breakout that there's probably trapped traders above, and a second leg down is likely. In general, and I'll get to this a little later too, but also to keep in mind in general, bar 1 remains the high of the day about 20% of the time, so about once a week. And when it does that, it's usually, if it's going to be the high of the day, it's usually a bear trading range day or a bear trend day. So here, even though we have a sell-off on the open, the probability that bar 1 remains the high of the day is not all that high. Spike, implied pullback 3, and we're channeling down 4, implied pullback 5, another leg down 6, pullback, another attempt down. We have a tight channel. This is technically a micro channel. No bar broke out above the high of the prior bar from bar 1 down to bar 7 until finally bar 8 broke above the high of bar 7. So this tight micro channel is a breakout. On a higher time frame, you would not even see bull bars. And this breakout is big and strong enough for a second leg down. So the first reversal against a micro channel like this should fail. And that's what happened on bar 8. The market rallied from the low of 6 to the high of bar 8. It broke the micro trend line. You can draw a trend line from the high of 3, connecting the highs of these bars. Bar 8 slightly broke out above it. It's enough of a breakout to disappoint traders, trap traders below. So those who sold to close 6, trapped on 7 and 8, disappointed by the rally, those bears who sold here may become buyers. They may look to buy below the low 1 instead of sell because the pullback broke this trend line. And at this point, you have to wonder, when the market breaks above the past 2 bars and there's this much overlap, are there still aggressive sellers below bars, or do the bears who sold get disappointed and become buyers? So low 1 short, but disappointed traders below, buyers below. That led to a bigger minor reversal. So micro double bottom here, down, up a second time, but tight trading range and still a tight bear channel. So pretty decent breakout, bar 11, and a follow through bar 12. Not as strong as it could be, 12 being a much smaller bar than 11, but it's still closing above the prior bar. The bars are mostly body, closing near their highs and crossing the moving average, breaking above the past 6 or 7 bars. So decent breakout for the bulls, but still tight channel and tight trading range. Down here, this is a magnet. The market went sideways here for 5 or 6 bars. This was an area of agreement. And when the market breaks against this tight channel, I said this was a trend line break. There's a micro trend line. There's another trend line from the high of 3, maybe the high of 4, the high of 8, 9, something like this, that 11 and 12 clearly broke above. But for a major reversal, you usually get the more clear trend line break and then a retest of the trend's extreme. And then maybe we get a lower low or double bottom or higher low, and then maybe a major trend reversal. So minor reversal, 11-12, breaking above a lot of bars to the left, breaking above the moving average, probably buyers below. But at this point, what's the context? It's several bars below the moving average. Now we're crossing the moving average. We're getting a couple of closes above, but we're testing resistance. Remember earlier, spike, implied pullback, channel. Channels evolve into trading ranges, and typically, with the typical market cycle in general, the trading range becomes the top, or the top of the trading range is the beginning of the channel. So breakout, pullback, this is the start of the channel on bar 3. You expect the high of bar 3 to be resistance. We test near it, possibly vacuuming up to resistance, and then a much smaller bar. So this is indicating that momentum is compressing. Range expansion, range contraction, much smaller bar, and then reversal down 13. So we have the small bear trend, we have the trend line break, and now we're getting the retest of the bear trend. Remember, this breakout 11-12 traps traders below. So those bears who were selling above bars here, selling above 6 or 7, they made a scalp. Maybe they sell above 9 and 10 and they get trapped. So these sellers anywhere down here, after seeing 11 and 12, they probably become buyers. So buyers below bars down here. Big down, big up. Trading range at this point. So in 13 and 14, sell off to the lows. Should you be selling down here? Probably not. It looks like we have several legs down, maybe 3, maybe 4 legs down to bar 8 and 9. Overlapping bars, and then a bull breakout. Big down, big up. This is resistance, and down here is support. The market tests support. Bears try to break below the neckline. This is a double top with 3 and 13. And really the neckline is the bar 6 low. We didn't even get down there. So the bears selling here are selling momentum, but in reality, there's probably trapped bears who sold down here, had the market go against them on 11-12, and they're buying back shorts. That's contributing to the buying on bar 14. You also have bulls seeing the major trend reversal argument. They're looking to buy, and we get this big reversal up and a follow-through bar. Not as strong as it could be for the bulls, but no reason to sell here. 14 and 15 is reversal and follow-through. 15 closing above many bars to the left. It's a double bottom from the bottom of a trading range, and I said bar 1 unlikely to remain the high of the day. Probably better chance of it remaining the high of the day at this point in time, but after seeing this trend line break, this retest, and especially this breakout on 15, the probability is much lower than it was down here that bar 1 would remain the high of the day. So the first target for the bulls, probably the bar 1 high, and then a measured move up. I'm measuring the low of the bull bar 14 to the close of 15. And what happened here? 13, strong bear breakout bar, top of a trading range, probably sellers above. They get trapped on 15. Market pulls back, 16. Those sellers become buyers. They get trapped, and they figure, well, at this point, we're probably going to a new high of the day. rather than sell here, I'll look to sell higher. So bears who were selling, buy back shorts, bulls getting 14 and 15, buy the first pullback. They're expecting at least one more leg up. So low one short 16, but big bar, context not great after the double bottom and the rally to 15. Decent bull leg 17 through 19, but bad location. Top of a trading range, probably going at least a little bit higher. And really no reason to sell. If there's no stop order sell setup, no top formation, then it's okay to hold on to longs. Where do always end bulls, swing traders exit? Do they have to exit below 19? No. Maybe a micro double top, 21, but never fell below it. And then a bull breakout to a new high, 22. So no reason to sell here. The market had to go higher to find sellers. We still had the high of the day at that point to be tested. Then there's a measured move target. And there's probably other magnets. In fact, there's definitely more magnets above that I'm not showing. Maybe a breakout. Measured move of the 17 low to the 18 or 19 close projected up. The reason I have these bars highlighted is because they are a late leg. The context isn't great. Big down, big up on the open, trading range likely. After seeing especially bars 1 and 2 on the open, the probability of a bull trend day get reduced significantly. Bull trend days that last all day usually don't start with big bear trend bars on the open. So big down, big up, hinting toward trading range day. Maybe a double bottom leg count reset, leg 1, pullback, leg 2, leg 3. So 3 legs up to resistance. Not ideal to trade here. And then we got range compression. I view it as a triangle final flag. We are about 20 bars into a bull trend at this point on a trading range day. So spike and wedge channel, 1, 2, 3 pushes up. Or you could say 1, 2, 3, 4 legs up. But either way, late in a channel at resistance, we're trying to hold above the high of bar 1, but the bulls lost momentum here. And we're still relatively far above the moving average. So do bulls want to buy above the moving average when the price action looks like this? They'll buy below bars for scalps, but the momentum is dying for the bull trend. And I've mentioned we're 20 bars into a trend at this point on a likely trading range day. So to hold on for a swing here is low probability. 32 through 34, bear breakout and follow through. It's a micro channel. It's actually a micro channel since bar 30. So maybe 8 bars down in a micro channel. First reversal, very likely to be minor. Also, the context is good. We had a spike in channel. We have a wedge top formation. And I said probably a trading range day. Big down, big up. Channel. The channel is expected to evolve into a trading range. And the start of the channel, the way I view it, will breakout, pull back, start of the channel at the low of 17. That is the target for the bulls, or for the bears rather. Bear breakout, micro channel, and a pause bar, 35. No reason to buy. This is a bad high 1, 36. We triggered the buy, and the market did what it was supposed to do if you're a bear selling above a weak high 1. When you're selling above a bar like 36, you want the market to go your direction immediately and not go far against you. So you might put a stop. If you're selling above 36, maybe you put a stop, a measured move up of 36. Bar is small, and there's probably sellers up here because of the trap traders. So maybe you'll use a measured move twice the distance of 36, put a stop up here, or the major swing point. Because this final flag, we broke below it. There were buyers below 31, 30, 28, 24. And this, in theory, should be support, but we broke below it, got follow through, and that creates resistance above. And then the micro channel down to 39, it's leg 2, leg 1, pull back, leg 2. But is this a second leg trap at the bottom of a trading range? Probably not. Leg 2 is very context dependent. It's probably the most context dependent. Well, I shouldn't say that. Everything's context dependent. But this leg 2 on 39, to me, the way I'm trying to organize my thoughts about it is that this can be treated as basically a leg 1. This is a tight enough channel down from 30 to 39. It's kind of similar to this, where we pulled back here, but still tight channel. First reversal up should be minor. Second leg, very likely. This is even better context. This was at the bottom of a trading range. This is possibly the top, the upper third of a trading range. And we know there's a target at the 17 low, probably the minimum target, and then maybe it's going to be an expanding triangle day, going up, down, up to a new high, possibly down to a new low. And there's other prices that were broken out of down here that could be tested again as well. So reasons to sell, and decent bear breakout here, nothing very climactic, price control, time control. If the bulls bought below 28, did they make money? Or let me back up, and I want to make this clear. Counter trend traders, let's say a bear on the way down, we're selling above bear bars. So tight channel, sell above a bear bar, bar 8, you get filled on 11, market traps you into a losing position, and forget stop placement, forget all of that, because let's say you have a wide stop, a measure move up, or even further, you don't get stopped out here. You sell here, you sell more higher, you make money on the retest. In fact, it went all the way down here. Let's say you sell above bar 13. Triggered on 15, market goes against you, maybe you scale in during the bar, comes back to your entry price, you're able to break even at your first entry and with a profit on your later entry. You sell above bar 16, you get trapped on the bull breakout, and maybe you have a wide stop, scale in higher, market comes back to the trap price. So the point is, on the way up, selling above bear bars, bears were able to exit at break even, and if they scaled in, they could make a profit. Bulls buying below 31, 30, 24, they get trapped on this breakout. Market never comes back to their entry price. This is an open gap. So we have a micro gap here. Buyers below 36, they get trapped. Maybe a brief opportunity on 39 to avoid a loss. It doesn't look like we quite got there. So trap traders here, give up bar 40. Big bar in a trading range, usually good to take profits, going to go sideways for 1 to 3 bars after it, and we're testing support. We're back to the bottom of the range. So a pause bar, 41. Not the worst follow through for the bears, but obviously not ideal either. The bar still broke out below the prior bar by about 50%. It's a bad buy setup. But by bar 43, we have a micro double bottom, down, up, bottom of a trading range. Still a tight channel. If you're buying for a scalp. You're not expecting a major reversal and higher probability to wait for the breakout and follow through. So this breakout and follow through, likely to get a second leg up, but still probably minor. Remember the breakout point from bar 40. So the low of 39 is probably resistance at this point because of this breakout. We had range expansion, range compression, range expansion in a big way. And we got a spike in channel, bear flag in this case. And this is implied. It looks like this was a micro channel all the way from 43 to 51. But we can imply that there are pullbacks. And if we look at a 1 minute chart, 46 through 51 is a bull channel. So spike, smaller momentum channel. And again, you expect a channel to evolve into a trading range, minimum target, the low of bar 46. And we're testing the breakout point. So in theory, again, this is a channel on a smaller time frame. down, up, up, down, up, down, up a third time, and even a fourth time. So these are legs 3 and 4 at a resistance. Basically the dueling lines, wedge double top, sell setup for the bears. Can you sell against this? It's a micro channel. Context is decent. Maybe better to wait for consecutive bear bars, 52, 53, or the bear breakout, sell to close 54, sell to close here, breaking below where we should have found support in theory at the bottom of this channel when it evolves into a trading range. You can even see 54 broke below it, and then 55, the high, tested it. And on a very small time frame, price action is fractal, breakouts in second legs. The tail from the low of 54 to the close is a bull breakout, and then it got a second leg up here. But that's just very minor, just interesting. Now, strong breakout and follow through. It's a micro channel for the bears, second leg down likely, and this was likely to get a second leg. One thing I didn't mention here, measured move up of the micro double bottom, we failed, just came up short. On the way back down, this might be leg 2, maybe down is leg 1, pull back, leg 2, probably buyers below here because we rallied for many bars. But if we look to the left, because of the big bar on 40, the bull breakout, even as it grew, by bar 45 it had already broken out above 3 or 4 bars, and then it stayed above 3 or 4 bars, and the bars just kept getting smaller and smaller until we finally tested the high of 40. So we're not breaking above many bars here as we were over here. Bear breakout below many bars, bear breakout below many bars. This one, bar 45 and bar 49 are breaking out above the same amount of bars, 3 or 4. So breakout follow through, probably going to a swing low, maybe test the low of the day. And even though this was relatively small, 16 and 17, compared to this bear leg and this bear leg, every point, nothing is random, and you can draw a channel line from this low to these lows to this low. And you also could draw a trend line here and draw a parallel. Different ways to do it. So maybe a sell climax in a late leg testing the channel line. So this is a buy zone. Probably for me, better to look to buy to take profits on shorts in this area. Really aggressive to buy, but there probably were buyers below here with a wide stop scaling in, betting that this is not a bear trend. It's a bear channel, maybe, but there are legs in a trading range. This pullback is many bars and really deep. So the odds are there's buyers below there, and this will also get a deep pullback, which it did. And look where the market tested. Reversal up beyond the channel line and the prior low of the day. Strong breakout bar, 59. Second leg up, likely. Basically a spike in channel here as well. But testing this price, the low of 46, where the spike in channel, the channel began, and in theory should have been support. But we broke below it, it became resistance, we tested it again, and it stayed resistance. Spike in channel, bear flag, testing the bear trend line, sell zone here. Low 1 but bad signal bar, and tight channel. First reversal, lower probability. Second reversal, higher probability. Below 64, reasonable sell. 66, reasonable sell. Looking for another leg down, then another climactic leg 3 or 4 on bar 70. Climactic reversal, 72, 73. These bull bars probably will get a second leg, and look where the market tested. Breakout point created by bar 69 was resistance. And then micro double top, up, down, 77, strong enough bear breakout for a second leg, another spike in channel on a very small time frame. Look at a 15-second chart. This is a spike in channel, but against a stronger bear breakout, second leg down, likely this is probably a minor reversal, and the bears got their second leg on bar 81. So that's going to do it for today's end of day review. Thanks everybody for watching and listening, and I hope everyone has a good night.